favorite strategies. It's simple, time-based, and works in any market. This happens several times a week, and it's a great way for beginners to get started. The basic premise, or the TLDR, of this strategy is we're looking for an overextension of the market during a high volume time. So that's like market open about 9:30 Eastern to about 11 Eastern would be our cutoff. After that big overextension, we're looking for a retrace back to that, a retest of that level, and then for price to continue in the original direction. Don't worry, I'm going to explain everything. I have lots of videos. You're going to be fine. These are all really simple, short trades. You're going to be in and out, usually under an hour. As another brief note, if you've ever heard of like the ICT silver bullet strategy, I'm pretty sure this is fairly similar, but I'm not an ICT guy. And this is not the silver bullet strategy. I just think it has overlap. So I'm not going to use that terminology. I don't really know a lot about that strategy. Okay, so let's break down a trade. You're going to look for specific times. We want high volatility. The best time for this, if you're an American, is going to be right around when the stock market opens at 9:30 Eastern. From 9:30 until about 11 is our prime target. Volume and volatility are what make these markets move, and they set up great opportunities for us. You're going to want to use a low time frame here. The 1 minute, the 3 minute, the 5 minute. Anything higher than that isn't going to really make sense for the entries and exits that we're looking for. So we're looking for a big candle like this one. Normally it's going to be like twice as big as the other candles you've been seeing. What this means is that the market is making a really strong move. This candle might make a fair value gap, which is what we're looking for. A fair value gap is when the candle before the big candle and the candle after the big candle don't quite connect. So there's a gap in their wicks. That gap shows us that the market moved really quickly and extended before it had time to properly play out that price, basically. When we see this fair value gap, we're not going to enter our trade, but we're really going to start looking for entries. What we're looking for is for price to move back into that fair value gap, to retrace up into that gap. What we want to see is a candle go into that fair value gap and then go back out in the original direction. If the candle goes all the way up past our big candle, past our fair value gap, it's not a trade, we're not getting in. So once that candle's gone in and touched back out, we're placing our order. Normally, you're gonna wanna put your stop loss right above or below the big candle, and you're gonna set your take profit for a level of support or resistance that you've seen. You want this to be at least like a 2-to-1 risk to reward, but honestly, you can set really high targets here, and sometimes you'll see this go really far. But if you're not sure, set 2-to-1. That's it. Let's take this to profit, hopefully. Okay, before we really wrap up, I want to touch on a few more points that can really make or break this strategy for you. First, let's talk about frequency. I usually see this 1 to 3 times a week. It's going to happen across any kind of asset, the stock indices, Forex, whatever. It can happen on any of those. But it's not going to happen every day. You're really looking for that strong move, the retrace, and a continuation. You're not trading every day, and that's great. You want quality over quantity. You're also going to want to make sure to remember your position sizing. Never risk more than 1% of your account. I could go on and on and on about risk management, and I have before, but just 1%. Just do that. As always, any new strategy, start with paper trading, do some back testing, see how you like it. Get into the charts, watch how this plays out, and I don't know, maybe try it out for yourself. Remember that no strategy works 100% of the time. Depending on how picky you are, this can easily have over a 50% win rate, but it's going to lose. Trading is a marathon, not a sprint. Stay disciplined, stay patient, stay focused, and don't risk money that you can't afford to lose. If this video helped you out, the way you can help me out is liking and commenting on the video. If you didn't like this video, let me know why, and I'll work on it in the future. Either way, my name's Andrew, and I'll see you around.